not be weary. They shall walk and not faint. Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you.
Good morning, everybody. Good morning, Tony, as always. All right, so just a quick reminder of what we're going to be going over. We're going to go over news, right? We're going to look at the news, higher time frame risk on, risk off, liquidity mapping, monthly, weekly, daily, quarterly power 3 ideas and mapping, weekly, daily ranges, validation and validation, right? Just pretty much as usual. Not going to be much different than the other Sundays that we've prepared, right? Let me know if you guys can hear me okay. Tony, let me know if you can hear me. If you could see everything properly as well. What's up, Chawezi, my brother? All right, Tony said, yeah. Chawezi, how about you? Do things look clear? Can you hear me okay? Everything is good. All right. I'll take your word for it. So let me move that. All right. So yeah, as always, first and foremost, we got to start with the news, right? What we see here can help us kind of map out what days should be potentially the acceleration days, and then what days could also just end up being the setup days, right? For the liquidity, for consolidation, manipulation within the weekly range, and then of course towards the end of the week. Depending on if we hit a higher time frame PD array, as a result of, the majority of the weekly range, it may result in a TGIF or a moment in time where we could just anticipate a reversal, kind of how we did this week. The NASDAQ turned around, which, it's reasonable. We took out all-time highs, created new all-time highs, and as a result, it came back down and reached into, I can move over a little bit, came down, reached into the fair value gap. So when you see something like this take off, more often than not, when there's something like this available, it will look to try to reach into that. And so this is going to be important when we talk about the indices later. But yeah, so the news, Sunday, Monday, there's no news. So you can anticipate that Monday will most likely be low probability. They're part of the manipulation and consolidation portions of the weekly range. So this here very much shows that phenomenon just by simply looking at the fact that there's no news. Okay, We have unemployment claims and a couple other factors like PMI, home sales on Thursday. So depending on how Tuesday, Wednesday delivers off the heels of Sunday and Monday, if we hit a higher time frame PD array going into Thursday or Friday, this may be the catalyst that gives us that impulsive move, triggering in that retracement. So of course we'll have to wait and see what transpires throughout the week to make any cemented opinions, but yeah, that's pretty much the landscape for the news. So keep your eyes on these specific days. And yeah, the characteristics of each day are very specific. Thursday, Friday is reversal days. A lot of times, if a PD array is met on the higher time frame, Tuesday, Wednesday generally expands, accelerates, being the expansion phase of the weekly candle. Sunday, Monday, like I said, they are manipulation and consolidation. Okay, and yeah, Tony said patience is key. This kind of helps you understand why patience is key. You know, because just because we want to buy or sell, we still have to have certain market dynamics in order so that we can, you know, take advantage of high probability opportunities. All right, so yeah, hopefully that makes sense. Let's move on to bonds and yields now. Let's look at the bonds. Get the yields up real quick. So we can take that eyeball off now. I'm gonna leave this one on just in case. So yeah, if we look at the bonds from this monthly chart, I've mentioned this before, but I'm gonna try to be as detailed as I can in terms of what you should be doing every single Sunday. You know, or when you look at a higher time frame, what should your initial perspective be? Like, what should you be mapping out? First and foremost, you obviously want to get the current and previous high and low given the candle. In this case, we're on the monthly chart. So each candle is a monthly candle. So we got to map out the high from the current month and then the low of the current month. You also want to keep tabs on the previous high and low for the monthly candle. Or, you know, AKA the monthly range from previous. You could see how that low was utilized, right? It's been attacked pretty much throughout this month, right? So that was a target. You know what I mean? If you're on the lower time frame, it looks a whole lot more useful than it does here. A lot more clear as well. But you could see this current candle swept out the previous month's high, and it ended up being bearish so far, and so it ended up targeting the monthly low from the previous month. So that is like an initial liquidity pool. Whenever you start a new month, a new week, a new day, the previous candles range, the highs and lows, they're going to be very important, right? And they're always there as long as there's a candle forming, as long as there's price delivery in previous days, previous weeks, previous months, which, you know, I don't believe that's going to change, right? I don't believe that they're going to change the fact that a candle forms every second of every day for the most part, unless it's the weekend, obviously. But yeah, so you want to mark off the high, the low, the previous high and low, in this case of the monthly candles. That gives you a monthly perspective. You want to look at the near-term PD arrays that are both above the current candle or current range, and then also you want to look below. So in this case, right, if we move to the 2-month, I think there's a more clear order block in here encapsulating these two up candles. So you can see that there's basically a monthly bearish order block. Price has been bearish. Okay, we've taken out buy side, drop lower, failed to take out buy side, and then continue to drop lower. Right, so we're going to continue to keep this stuff in our mind. Right, so we now have this low. Okay, so we got this low to observe. Let me see what I marked off. I said something about this potentially being a quarterly shift a while back when price was rallying up into that level. Okay, as it ran up into here, because the monthly chart was not overwhelmingly bullish, right? We were still in a bearish order flow. 3 PD arrays have not been violated. Things have been continuing to hold where they're at. So nothing changed. There's no interest for me to think, okay, it's going to be like overwhelmingly bullish just simply because it retraced. All this simply did here, in this perspective right here, price basically ran up, right, hit this, and then it rejected away. Now, if it would have closed above this level or used this as a bullish order block, and just maybe it set a swing high like this and then took it out, that'd be a different story. But because that didn't happen, this was all just a retracement off the shift in market structure that happened here. And then as you can see, it's just continuing to deliver to the downside. Okay, so we're going to keep that opinion in mind. We're going to still hold on to that. Again, like I said, on the 2 month, you can see there's a bearish order block here. If we get down below these wicks, this wick here is going to potentially be pretty impactful in terms of dynamic resistance levels to watch price respond from, as it potentially looks to target the low down here. Okay, so again, basically what I just talked about is all I will be paying attention to for the monthly perspective. Let's actually go here real quick, make sure I marked it. And I'm going to take this off, so hopefully you guys keep what I've mentioned in mind. I do have screenshots in the Discord, so you can refer back to that if you want to like review kind of what we've been doing. If you're new, right, and you want to see if what I'm saying is consistent, there's at this point in my private group, there's like 3.5, almost 4 years of evidence. But then for the YouTube lives and just me being public, like in a dramatic fashion, which has happened this year. If you go to my YouTube channel, right, scroll around the years videos that I've been posting this year, every single one of them for every single week and basically every single month in terms of drawing liquidity and narrative identification, every single thing that we've talked about has came to fruition. And I've had many students like Tony and Choezi actually see it real time too, and they hop on all the time. So yeah, if you're new, keep that in mind. Go do some digging. I want you to do just that, right? Try to prove me wrong, and you'll find that it's very difficult to do so. And so hopefully that is helpful in terms of trusting what it is that we talk about, right? So again, we got the monthly high here. Then let me go to zoom in a bit. This low was from the quarterly time frame, the 3-month chart. There's this big, huge wick down here, and I've been using that as a reference for specific areas that price will stop at. And you could see that the quarterly wick has been pretty dynamic, right? Stopped here, once more it tried, and now we're kind of approaching it one more time. Okay, so we'll see what happens with that reference. I just wanted to put that up for completeness sake. This is also another monthly low. If we go to the 3-month chart, let me see. It's actually a quarterly low. So let's get that marked off correctly. All right, so these are the 20, 40, and 60-day references for the IPTA data ranges. I can remove that. So let's go to let me see, why does it say 27? Okay, yeah, so 21, 40, or 20, 40, 60, right? And again, inside of the 20th and 60th day within the range that you move forward 20, 40, and 60, from the start of June, which is the month that starts the new quarter, within that 20 and 60th day, there's going to be a potential change in sentiment given what we saw before leading up to this little time window, right? This little quarterly shift window. You could see this created a quarterly shift, okay? Okay, what did it shift from? Well, it was going higher prior to that time. We're still in a higher time frame bearish narrative if we look at the larger perspective. But you could see within that 20 and 60th day, there's a shift, right? There's a shift here, right? Shift in market structure, fair value gap, YouTube model on this higher time frame chart, right, on the daily. Okay, and then what's been happening? It's continued to drop. So if we look at this, it's going to potentially continue to go lower, unless, of course, we break 3 PD arrays to the upside and things start to change. Okay, I will say that in order for that to take place, these up candles, the midpoint needs to be broken. It's a 2-day bearish order block. So this order block needs to be violated. If we look at the daily chart here, we got fair value gap and we have a swing high, right? And then we got the wick and stuff like that too. So in order for me to think that this market is now shifting from bearish to bullish, it's going to have to get up here. So that's my line in the sand. And I think I can actually clear off some of this stuff. It's kind of far away. So I'll go back to that if I have to later on. We got this monthly fair value gap here too. Notice how that was beautifully used as a resistance point, right, from the monthly. It's that little fair value gap in there. Right, so both buy side and sell side delivered. Then we came back, overlapped it one more time. And then once it returned back into it, it used it to continue to push lower. So again, that's just going to continue. And that's kind of supporting the idea that this is going to continue going lower. It was used in terms of timing within the 20th and 60th day as a pretty strong, relevant resistance point. And you could see there's a swing low, swing high, price broke down. So this is actually a order block plus a bearish breaker. We return back into that, and what do you know? It pushed lower, continuing the shift from this retracement going higher to then breaking down within the 20th and 60th day. Okay, so again, we have a quarterly low down here. Okay, and then we have all this here. We got the wick, order block, like I mentioned, all these different levels to hold price going lower. Only way that I change my opinion is if price breaks above the high up here, maybe even uses this fair value gap to be overlapped and use as support. So then it could, be used to transition us from bearish to bullish. Okay, we've taken sell stops. We have some more relative equal lows. We do have a fair value gap in here too. It's kind of being used as an opposing PD array to this downtrend. And you could see an opposing PD array on the higher time frame was met, liquidity was taken, and as a result, we're now seeing price retrace a little bit. That is how you frame counter trend ideas, right? If something is bearish, look for a bullish PD array to be tapped into or a reusable one like this. And then that can be when you anticipate price to then look, in this case, for a slight premium or just a retracement, reaching into a premium array, a wick, a volume imbalance, fair value gap, order block, whatever, right, previous low, that could then potentially be used to set up another leg, in this case, lower. Okay, and you do the same thing if it's going higher. If it hits an opposing bearish PD array to the upside and we're still bullish, that could trigger in a moment where price retraces, looking for a discount array or a bullish order block to then position the higher time frame to start moving again. So you could frame out the targeting of that opposing or that PD array that should help continue the move, or you could just wait till price trades down into like a bullish order block, bullish fair value gap, maybe to sweep a low, to then time yourself to get back in line with like an uptrend, right? And the same principles apply when you're going lower, but from the sell side perspective. Okay, so hopefully that makes sense. Do you guys have any questions about anything I've talked about so far? Just let me know in the chat. Hopefully things are starting to sound real repetitive, especially for you, Tony, and Chowezi. You guys are here all the time, and I hope this stuff is seeming very repetitive, because it is. It doesn't have to be complex, right? It doesn't have to be always something new. Most of the time, it's going to be very, very repetitive. All right, so again, I hope that makes sense. I'm going to just continue to hold on to this perspective. Try to continue to see price look to run higher, to then use something like a wick, order block, or other premium array to then set up further downside delivery. Overall, potentially looking to target this quarterly low, which I think is, it's reasonable to think about at this moment. So we'll see. Right, and until something changes, that being the high here and all these PD arrays in here getting violated, I'm going to continue to hold on to that opinion. Okay, so in a nutshell, that is my opinion for the bonds currently. And if we go now to the yields, let's take a look at what's happening here from a monthly perspective. So remember what I said about what you should be doing first and foremost, right? You go to the higher time frame. Where do you begin, right? You look at the current and previous monthly high and monthly low. Okay, and then if there's one like from 3 months ago, right, that could also be relevant if it's if the delivery in the current candle or current monthly, weekly, or daily range is close to something like this high or the low. Okay, those are close proximity PD arrays and liquidity pools. But once you have that identified, you then look for close proximity PD arrays in general. Highs and lows are PD arrays, but I'm talking about other ones too, right? So like this order block here. Okay, so those are going to be important when we look to see. Here, let me look to see what price is going to do. Here, let me kind of go clean that up and. Actually, this is pretty much all the different stuff that I'd want to mark off. Let me just kind of adjust a little bit. So for Sunday and Monday's trading, we always want to look at the previous Friday, right? We look at the Friday's high and low, because once the new candle opens up, it's going to be within that Friday's range. So regardless of what it wants to do, it's going to use one of those liquidity pools to either set things up or be used as a draw on liquidity. Okay, so hopefully you understand why that's important. We also took out a quarterly high recently. Okay, so that's a liquidity pool that was purged, and then price as a result has rejected off of it. We also got an order block here. Middle portion of that's been respected as an opposing PD array to this up movement. And you can see that there's a healthy retracement taking place in here. So similar to what I was talking about in the other asset, if we're going to go higher for the other asset, there's going to have to be PD arrays that get violated to the buy side, specific ones that I just mentioned a minute ago. And then it's going to be the same for this, but to the downside, we're going to have to watch the wick here, the low. We're going to have to watch the new wick opening gap. And we're going to have to, let's see what else. Let's see if we move up a little bit. We have multiple new wick opening gaps, as you can see below us. So we'd have to keep tabs on all those that are close to where price delivers to. So yeah, let's drop down a little bit further. So we have multiple swing lows here on the 8 hour. We have this large candle here, right? It was a order block on that, was it weekly? No, let's see, monthly. It was like an order block right here too, right? So it basically used that when it delivered in. That's that large string of candles right here on this 8 hour, right? So this is one pretty large order block, right? So it was used, right? All this run higher, again, if you go back and look at some of the videos I've done, I've talked about this going in this direction. You know, I've been walking this week by week in my private group, day by day, using all the same things. And it's just continued, right? So unless these things start to get violated, price is going to continue to go higher. And we're going to see this as just a simple retracement, right? A retracement to a discount array to then continue going higher. Right, very simple. And then what's available to the upside? Well, we got the high up here, we got the wicks, we got the previous day from Friday, Thursday, and then the weekly high up here from Wednesday that started the retracement. So when we go higher, if it does go higher, which I'm anticipating, it should be able to target those levels first and foremost, and then maybe even eventually, if we get real excited for the next couple weeks, couple months, we may end up eventually hitting this quarterly high up here for this quarter. Okay, and if we go all the way back to June 1st, which is the month that starts or has the quarterly swap or changeover beginning towards like the middle of the month, but the start of the month, right? If we look at that, mark off the open, you could see price consolidated, manipulated below the open price here. Okay, so just mark that off. That's the start of the month, and then now price has gotten above it. So what do you see in price? It's power 3 for the quarter. Okay, so it dropped lower, and then we've continued to go higher, and it's been supporting that ever since. Okay, so we could see that that's on the back end to assist us in understanding what price is doing, unless, like I said, we start to break down below these levels. Okay, and then we can potentially start to make adjustments if that does unfold and start to go against the buy side setups and draw on liquidity. All right, so if you look at this, the 10-year, we also have a swing low, we have a fair value gap, we have an order block, and we have another swing low. So again, if it displaces through that, start using like fair value gaps as resistance, like overlapping them, continuing to favor downside, then we're reliably going to be able to change our opinion from bullish to bearish. And again, just to be clear, for completeness sake, the bonds, this market, the T-notes, they pretty much indicate or influence what should happen in the foreign currencies like GU and EU and the indices. Right, so this is a very good assistant in validation of a narrative or invalidation of a narrative for those assets, the currencies and the indices. And then this has a direct impact. The yields has a direct impact as far as what the DXY is going to do. As you could see, we've been rampaging a little bit from that low, which was outlined, the quarterly fair value gap. Okay, so it's been moving higher since. And also, as this has been unfolding, we've seen this continue to unfold going higher. Okay, so you could see the correlation there, right? And hopefully you could also see the correlation as you do these types of studies and hop on with me on a weekly basis. You could also see the correlation between the currencies and the indices with the bonds. Okay, this is like one of those pillars to my trading, to my ability to call the market, as you guys have seen, months on end, but quarter by quarter, week by week, day by day, month by month. This has a pretty strong assistant factor in terms of me validating whether something's going to continue. If these are consolidating, if both of these assets are consolidating here, the bonds and yields, that will send a reverberation through the other assets that they impact. So a lot of times when that happens here in the interest rate markets, like they're going sideways, there will be an inability for the DXY and the foreign currencies and the indices to trend. It'll most likely be bouncing back and forth, right? So there's a piece of information there that can help you navigate whether something's in consolidation or if there's going to be a trend that's trustworthy. A trend that's trustworthy has pretty much multiple markets that either correlate or reverse correlate, basically operating within their symmetrical nature for the overall market sentiment. Yes, actually, Chawezi, good, a good point. We have been talking about the lack of correlation between the interest rate markets and the relative assets they impact. But recently, right, we're able to see that there's somewhat of a correlation now, right? So, we'll see how long that lasts. But for the most part, you can definitely put that in your notes that symmetry looks like it may be finally kicking back in order. This had a quarterly shift. So we're going to see, like I've been mentioning, the COT analysis, which I generally do in depth with my private group. The COT analysis it has been showing a potential for offloading of buy positions. Sometimes it lags, right? But we've been calling for that potentially all throughout this price delivery once I saw the signature, which I have it in my my free Discord, but it's scattered all through my day-to-day engagements in my private group. We go into great detail about things like that and many other things in my private group, but I do share usable things here in relation to those topics. There's a lot of criticism about those things. Because people are very second chart based and no patience type of thing to watch long-term stuff unfold. So I don't generally go too in depth on YouTube because there's just not a interest for it, I guess you could say. But for the most part, there's an offloading of buy positions in the COT using ICT's COT analysis concepts. So we also can couple that with the fact that there's an SMT here at the highs. So that if we see a breakdown, right, say price on this weekly chart starts to break down below these candles in here, attacking these previous lows. We also have a fair value gap in here. We could rest assured that we are in for a really, really strong, dramatic decline if we were to break down below this weekly fair value gap. But we are definitely set to go pretty strongly to the downside for a long amount of time if we were to break down below this low. We could start to see early signs of breakdown. If price does get down, like I said, below these levels here, it'll probably reach down for this weekly fair value gap in the indices, right? But we'll get into this in a little more detail in a little bit. But yeah, let me ask you this: do the first two assets make sense so far as what our opinion is for the bonds and yields and what they impact and why they're important? Just let me know in the chat. See, this is what I love about the students that are in our community. You guys are celebrating each other's success, and I'm really appreciative of that. So keep it up. Joe Wizzy said I utilize 1 hour to study market structure on DXY. Lower time frame for me to watch 15 minutes. I don't know if that would be helpful. What did you say? Example. Fritz said the DXY indices was a little wonky. Yeah, it was. Struggling to find the lowest time frame to watch DXY per session. Well, it depends on what your objective is. Like, what are you talking about in terms of managing a trade and the relationship while a trade's unfolding? Or are you talking about grand scheme of things like narrative, like overall where price is headed? Fritz. Not too sure why I'm not able to right click on things. It's kind of strange. Why is it not letting me? Oh, there we go. Yeah, that is strange. Why is it not letting me pin a comment? Oh, there we go. So yeah, in terms of this, what exactly are you for session bias confirmation? Yeah, so you're gonna obviously still want to know what the higher time frame's doing, like above the 15-minute, because that's going to indicate what's more useful in terms of the narrative. You don't want to put too much stock in overall like what the DXY is doing while you're in a trade. You want to have the large perspective, yes. But if you're on a buy and the higher time frame says buy and you're managing the trade, but you see like the 15-minute or 5-minute declining in the DXY, that's not a reason for you to be too upset or too interested in shaking out your trade, because sometimes correlation is not going to be perfect. The only thing that should be perfect is EU and the DXY. Overall, there's an impact as far as risk on, risk off is concerned with the DXY and the indices, but they're not perfectly correlated, so you can't observe it in a way as if you believe that, that's how it delivers. Because ES and NAS had very similar highs and lows, it seemed like Dow was kind of screaming from the back, I'm coming. Yeah, there's been a lot more weakness in the Dow. Clearly, right? The S&P and the NASDAQ have been going higher. You could see, though, going into the summer months, going into a new quarter, what happens when we go into this part of the year. Things go from very rapidly moving, trending, to then slowing up a bit and getting people to be fooled. And then now we're starting to see some things related to COT, promoting the offloading of buy positions. Okay, so we're continuing to monitor that, but overall, PD arrays have been holding. Nothing has broken down and invalidated our ideas using our principles related to validation and validation, which is 3 PD arrays, intermarket relationships, risk on, risk off, and just overall PD arrays getting violated. So because that's the case, we've just been pushing price higher, and you could see, it's been serving us well. So overall, narrative again hasn't changed. And as you can see, we've just been doing a great job of holding on to a narrative while still being able to navigate retracements, understanding what levels should hold, the levels that if they get taken out, what that would mean for whether price is going to continue or reverse. So it sets up a ranging accumulation phase on the higher time frame. No, so I mean you could classify that like a consolidation as like an accumulation, right? Because that's kind of what it's doing. It's accumulating on both sides. But overall, when we go into the summer months, there's a less likelihood that things are going to trend, right? Seasonally, right? The seasonal chart shows a lot of back and forth overlapping, and over the last 5-6 years, I've been able to get that experience and basically share it with you guys based on what ICT's talked about, right? ICT also every year makes it a very clear point to separate from the market. This year, I believe he went on vacation with his family again. The year before that, he went on vacation to Florida, right? Same time of the year. The year before that, he just stayed away from the markets as a whole, dropping videos. Okay, so there's a reason he does these things, and this is why. You can get caught up if you're not good at managing your risk, controlling your executions, never over trading and over leveraging. If you're not good at that stuff, this is the time of year where you will blow your account, and you will then start to doubt yourself. And then once price opens up a little bit after August, right? Sometimes in August, but after August, you won't have an account, right? If you allow this type of transition and seasonal influence to make it so you blow your account because you're not following rules or or being disciplined. There should always only be 1 to 2 trades a day. Again, it's one of the most simple rules. The risk principles I give are very simple, but again, it's the operator that generally makes it difficult for themselves because it's the lack of experience, the lack of submitting to the fact that the rules are not hindrances, they're actually protection, and just the lack of submission to the fact that you don't have to trade every day. It's hard to accept a lot of these things when we're new, but when you gain a little bit more wisdom after you've gotten beat up a whole bunch of times and you're sick of blowing your accounts or sick of engaging in times when price is just not favorable, or if you're just not ready to trade those unfavorable environments, which require certain modes of operation, you might have to just start practicing pulling back, because again, more often than not, new traders have been getting totally destroyed. I've got a couple people that I watch that live stream that they're not really that good, I should say, just to be nice, right? And this is, the frustration I've been saying. It's what gets invited as we go into the summer months. And it's like a veteran in war that has no idea what it's like to run into a battlefield with the bullets flying and how you need to operate. It's like a soldier that just runs into the middle of the field because they want to hurry up and get a kill, right? Or push the objective. They're going to get their head blown off because they just don't understand the terrain. And they don't understand that, not every moment in time requires you to take a shot because you'll give away your position, you'll do something else that jeopardizes this or that. So it's the same in trading. You know what I mean? Very similar principles when you're managing risk in general on a day-to-day basis. You got to know when to do things. And when things are looking like this, You have to pay close attention to the higher time frame, because if you're on the lower time frame, you're going to be flip-flopping, you're going to be getting fooled. And luckily we have a process that's very, very to the point, right? It's very reliable from the higher time frame. And that is very helpful to us to hold on to narratives, even if price does crazy stuff like this, right? Just continues to work the daily order block, which again, that's something I've been mentioning. I said, as long as we keep this order block, it's going to continue going higher, right? And it continued to do that. It's made you work for it, right? It's made you be very limited in your execution, or it's made you pay the price, you know. And I took a loss recently, right? I took a loss, I believe on a Tuesday live call, if I'm not mistaken. But then, of course, I came back and made it back pretty much towards the end of the session. Inside of a macro, right? Every execution I've taken for the last almost 7 straight months has been in a macro, or 5 minutes before or 5 minutes after, depending on the circumstances. Okay, so you know, again, that's something you want to definitely take to heart too. But yeah, in terms of the condition going into certain times of the year, in this case, the summer months, you got to drop your risk. My risk has been cut pretty much, you know, a large portion of the year so far, unless it was, you know, really ramping higher or making sense to go lower. But in all of this stuff, I've been cut to half risk. You know, I haven't been pushing too aggressively. I'm not that kind of trader. I'm not someone that's willing to over risk, over leverage, just to, you know, try to impress anybody. I have nobody to impress except myself from yesterday. So, you know, I'm able to hold back and manage risk properly, as you guys need to make sure you're doing as well. Okay, it's very important. You have no one to impress except yourself, and you know, don't try to impress yourself either too much. Just focus on trading well and following the principles that I share with you, and you'll do fine. And again, all the rules and things that we talk about, even if you're trading in a demo, you have to be following the rules, because you're going to practice how you're going to play. And if you cultivate subconsciously bad habits, because it's just a demo, right? When you get real life funds, or you're in a funded account, maybe you finally pass it. If you haven't dealt with those things and built the discipline to follow the rules and submit to them, and, you know, have a favorable perspective towards them, instead of a perspective thinking that they're going to hinder you or take away some of your opportunity. If you still have those lingering things, you're going to do it in live trading. It's going to manifest very quickly, because then things are for real now, you know. So irrational things will start to pop into your head, especially if you've reinforced those bad habits through demo accounts. Okay, so you want to keep that in mind. There should never be a week where you have more than 10 trades. If you're listening to my advice and you've been, you know, following what I've been saying, there should never be over 10 trades. If you take a loss, you should always be cutting your risk. So there should never be dramatically huge drawdowns, even in a demo account, unless you, of course, lost like 20 trades in a row, you know. So just keep that in mind, right? That's the benefit with the rules that I share. That's part of the reason why they're so important, and that's why I talk about them all the time. They're there to help protect you. Over trading and over leveraging will never, ever be something reasonable to do. I don't care what we try to tell ourselves. It may work a couple times, but it just takes that one time for you to blow everything up because you didn't build the discipline. You know, you got to make it a routine to be disciplined. When you engage a trade, you have to make a routine behind that. You know, how are you gonna operate when you execute a trade, when you're managing something, you know, and don't let nothing swerve you away from what needs to be done. You know, because think about it. If a business was ran that way, like a normal business, like they just, you know, run off how they feel versus what the protocols show they have to do to have a successful business, there would be no successful businesses, right? Because there's a set formula that needs to take place in every circumstance, whether it's to make profit, to or to manage losses, right? In a business, there's specific protocols to enable success. It's no different when you're being a trader. You know, you got to practice the right things, you got to do the right things, and have an organized reminder of those things, so then you don't forget and you're not just going off of emotions and how you feel. Especially if you want to be full-time. In order to successfully be a full-time trader, or to even make a normal side income reliably, you're going to have very organized things that have been proven, that are trustworthy to you, that have led to success in the past, and then try to continuously stay within those guidelines. We can't wing it. Everybody and their mama's winging it. Okay, in trading, they think it's a lottery. They think they're gonna win one huge trade and change their life. It's just not reasonable to think that way. It's not worthy. It's not worth doing. It's a waste of time. So, the faster you can submit to that, the better. And I try to do my best to give you guys very organized, structured ways of doing things. Whether I'm live, showing how I behave as a trader, taking live executions, mapping out trades on a daily basis, but then especially on Sundays, because this is one of the most important days of the week. The market's not moving, and we're developing an opinion. What should happen, what shouldn't happen. What happens if price breaks down below a certain level? What happens if it breaks above? What supports the overall narrative we're going to continue to watch, and what could change it in the near term, right? What could change it in the long term? What factors are at play that may change our opinion or support our opinion, and what assets influence certain things, and, what happens, like a lot of if-then scenarios, right? And then when the market opens, we could then gauge, what price is going to want to do, whether it reinforces ideas we talk about on Sundays, or if it goes against it, and then we have to make adjustments, right? So yeah, I hope that stuff is a good reminder, as far as what should be expected, both from me as the mentor, but then as you, as the trader or the operator of these certain things we've been talking about, because they're very important. They're very important things, extremely important stuff, like foundational piece of information. So yeah, so you want to practice how you play, and in order for practice to be, worthwhile, you have to understand what you're practicing, and you have to understand the important elements. And then, once you get that stuff in order, you're able to then walk forward and have a lot of experiences that improve your trading. Okay. So yeah, with all that stuff being said, let's go back to, hopefully the bonds and yields make sense. All right. So now we will go to this. So just a reminder, like I've been saying, there is a potential for offloading of buy positions in the COT. Okay, like I've been mentioning, there's a relationship between the open interest and the COT line that ICT teaches how to observe. In this case, it's showing that there's an offloading of buy positions, meaning that there's bearishness potentially coming into play for the indices and bullishness potentially for the DXY, which we could see starting to manifest. Maybe not so much in the indices yet, but that impact, that back-end information for the indices and the interest for certain things to take place related to possible retracements, you could see it has been manifesting in the currencies. So this is one thing that's in line with that potential objective, changing the delivery to then retrace in at least some capacity, in a pretty strong capacity, right? Maybe not throughout the rest of the year, but in this moment in time, it seems that is something hanging over the buy side delivery in the currencies and in the indices. Okay, plus we have the SMT, like I mentioned, with the indices at the highs on the higher time frame. So that's something interesting to note. Okay, in conjunction with what I just mentioned about the COT, right? And COT is a lagging indicator, so sometimes it'll take a while, but nonetheless, if we break down, we've been anticipating the likelihood of that potential decline taking place for a couple weeks at that point. Not necessarily justifying it, but keeping it in mind just in case it kicks in. And seems as though it may start to kick in. All right, so we're going to continue to monitor that for this asset and the currencies. Looks like they have definitely started that behavior. So I can say that if price... And then, of course, we got the rolling BPR I talked about all that previous week. But yeah, we're going to see how this is going to behave in here. We got the down movement, up movement, breakdown below the low. We haven't really got a closure below it, so we'll see if that's offered here. And then once that happens, we'll see how strongly it's going to want to continue, whether it wants to take out the low down here from a while ago and start that retracement within the context of what I said fundamentally, based on what it does using these areas, right? We got the wick here. Got new week opening gap in here. Price is holding below. We got another one up here, right? So this is going to be important. It's dancing between a previous new week opening gap. Seems as though we're forming a potential breaker, right? The down candle. If you take this low to that high, if we're going to trust that this is going to continue to go lower, the middle portion from this high to that low should not need to be traded into. The deeper it trades into it, the less likely it is that it's going to want to drop lower, given the fact that we have such a strong buy side and sell side delivery that broke down and is basically sweeping the low over here. For me to want to buy again, this is going to have to be traded outside of. These are going to have to turn to inversions. This fair value gap in here is also going to have to be used as a support level. These new week opening gaps above us are going to have to be traded into and then back to the buy side. Otherwise, for now, it doesn't look like it's overwhelmingly bullish. Structurally, it hasn't fully changed from, like, say, the monthly chart. Right, it looks like it's just simply looking to retrace back to the breaker. Right, we mapped this out as a breaker in here, and it continued to go higher. So we are in a mode that is retracing based off the delivery that's went higher, right? Taking out the buy side, and then seeing the breakdown with the fundamentals I've been mentioning that are pretty much supportive of that idea. Tony said, the more weapons you have, the better you are equipped for war. Yeah, the more the more important things that answer those 10 questions, I would say, allow you to be more equipped. In certain cases, the more weapons you have, the less likely it is for you to make a solid, confident opinion. Like if you have like 1,000 models that you haven't studied each individually, that could be a problem. But when it comes to these things that we do on Sundays, I'd have to agree with that. We have a lot of weapons that specifically play a role of confirmation and supportive ideas for a particular narrative, and what will go against that, and how can that assist us in being flexible. Okay, so in certain circumstances, the statement you mentioned may not be too helpful, but in this instance, absolutely. Because all this stuff is not subjective to what model you use to take an execution. This is all narrative mapping and bias and narrative confirmation and identification. So anyone that trades any type of style can use this idea. Even if you don't trade ICT concepts for execution, which I don't understand why you wouldn't, if this sounds good to you. But yeah, this is all pretty foundational, so hopefully it's clear enough, starting from the news up into where we're at right now. Okay, so again, price has been declining, so until price starts to show interest again to go higher, meaning it starts to start displacing to the buy side, using other levels as basically not stopping us from going higher, right? And then using it as inversion levels. Until that takes place again, I'm not going to trust this as a potential run higher or trust the buy side to continue. All this looks like it just broke down to then use this as a bearish breaker to then look to start wiping out some sell side, which has been completely available based on the huge run. Okay, so yeah, hopefully that makes sense. Fritz said, when would the currencies for US be moving out of pullback to reversal at the daily swing low, at the closest daily swing? So when would I kick this back in line to go to the buy side? Is that what you're referring to? So when would currencies for US be moving out of the pullback to being an entire reversal. Well, we're kind of kicking that in right now, right? It's completely reversing, and once it broke through this in here, this buy side delivery was turned off, as I've kind of been mentioning from the last couple of weeks, or from the last 2 weeks when it was running into those levels. It would have had to hold these levels, leave the lower portions available for us to then use this as a simple retracement to go higher. Because that didn't happen and we traded through it, it's going to be from the lens of going lower at this point. But if it was to displace and get back in line with the higher time frame, monthly potential retracement to go potentially higher, in order for us to get back in line with buys, it's going to have to displace and start creating some inversion levels and breaking 3 PD arrays back to the buy side. Otherwise, in this case, it's been reversing off the heels of the COT data that's been showing us that we're ready for offloading of buy positions, as you can see in here, has been the case, right? Yes, it's been that case clearly for the indices, but remember, if they're going to be correlated and the markets are symmetrical, it should have an impact slightly in this as well. This has been showing more of a interest to follow the correlation, the risk on, risk off, and reverse versus these, because lots of good things have been happening for the U.S. dollar, or just for the U.S. economy in general. So our businesses have been doing very well. So it's been having a hard time breaking down. So let's see what's here. Which point are you going to consider a quarterly shift? So I already have considered, at least for these, I've already considered this high up here as the quarterly shift once it broke down here, because it was going higher and then it broke down within the 20th and 40th day in a significant way. Excuse me. But yeah, so this was already a quarterly shift. Okay, and then this obviously, we're going to have to see if it's going to be a quarterly shift. It seems like it's already been very aggressive, pushing higher, following the yields running higher. Okay, DXY has been out of correlation, so we're finally, like you said, now kicking back into correlation. But when we're inside of the 20th and 40th, or the 20th and 60th day from the month that starts the new quarter, whenever you see a very dynamic price delivery that changes the state of delivery or breaks above something that could be classified as a shift in market structure, depending on if there's an overall narrative that you could paint justifying that move, that could end up being the quarterly shift. For now, it seems like this may, in fact, turn into the quarterly shift going higher for the rest of the third quarter, which is what we're in, because it's within the 20th and 60th day. Okay? And then when we were talking about this here, we've already had a breakdown with this as well, so it seems as though this was the manipulation for the quarter, and then we swept the highs, and now we've broken down. I want to see a pretty strong breakdown below this, right? But inside that 20th and 60th day, when you're referring to the start of the month that creates the quarterly, the new quarter, whenever you see a breakdown or a very strong displacement, depending on how it behaves around there, that can end up being the quarterly shift. Okay, so the NASDAQ has not really shown anything related to that, at least going against the run higher. So nothing's shifted. There's underlying things like the SMT and the COT that look like it may kick us into a little bit of a lagged quarterly shift, which again, like I mentioned for the last 2 weeks, would then result in us attacking this weekly fair value gap. And then however it is traded within that, if it uses it to, hit it and then continue to run higher, however it behaves in there will determine whether we're going to try to target something even more long-term bearish. Okay, but yeah, it has to have like a quarterly shift, or like a shift in market structure or a break in market structure within that 20th and 60th day. That way you can classify that as a potential quarterly shift, right? You're not always going to be perfect in terms of identifying it, and it's not always super obvious, but those specific guidelines are very useful in circumstances like what we see here on this, or circumstances like we see here on this, right? Because it was declining going into the new quarter, and it continued, hit a higher time frame quarterly order block, and then from that quarterly order block, you could clearly see that this shifted here within the 20th and 60th day. right? So as a result, it has shifted. And now that's impacting what the DXY is doing, and it's having the reverse effect for the currencies as well. DXY has been having trouble closing above mean threshold. Yeah, we'll get into the DXY in a minute. That's for sure. But yeah, so again, for the currencies, as long as this continues and doesn't have any displacement to the buy side, we may be in for a little bit deeper of a retracement. But we'll see, right? We will see what takes place. We're inside of this monthly fair value gap. I think I'm going to use this. This one's a little far, but obviously, it's still been having an impact. We've got the quarterly order block here, so it's retracing into that. So we will see if it wants to use that to displace higher. Otherwise, if it doesn't show interest in that, we have a bearish order block. We have a bearish breaker, right? They both kind of overlap. And so if it rejects into that and then starts to displace lower, we know we're in for a potential lower run, possibly targeting this. Before it gets to that, we have a low here, and then we have the wicks quadrants as well for the currencies. And that's assuming that the DXY wants to continue running higher, and then eventually targeting the equal highs up here. This is a very obvious buy-side liquidity pool. Okay, and then if we look at it from this perspective, we're reaching into the wick. Okay, so we got to observe how that's going to behave. That's the middle portion of that wick is right in this area where price is rejected from. So I want to see if we could displace above that and then use this as a bullish order block. You also want to watch this wick, see how price is going to respect the midpoint of that or not. Because it's having a refusal to do so, unless it breaks down, this may again be early signs of us starting to change and be interested in targeting the buy side up here. And because we've been so bearish, it's reasonable for a retracement to take place. But we'll see. There's a lot of manipulation in the DXY because of trade. Lower DXY means cheaper trade, apparently, which I never knew, right? But I've been hearing that from economists. So things have been getting manipulated in the DXY, sending price lower. Yo, what's up, Adam? I just passed funded account. Perfect. Beautiful. When it comes to you passing that funded account, was there certain stuff that you took from what you've been learning here that has helped you? If so, I would definitely be interested in hearing what you think has been the most impactful and helpful to get you to, or to play a role in helping you pass that funded account on your own. That's the key right there, on your own, right? I'm not putting you in trades, yet people are still passing funded accounts. So yeah, Adam, if you could let me know if the calls you've been hopping on have had an impact. And then, of course, let me know which specific things you feel have been the most helpful to you based on what we've been talking about. Tony's so funny. Yeah, congratulations, Adam. Tony said, "This is what you see why I'm here every Sunday." Yeah, it's going to be definitely, I mean, I got to say, it's going to be a very interesting rest of the year. I mean, let's see if we could continue month to month, day to day, week to week, staying in sync with the market. The way that we do things, though, makes it so there's not really much confusion as far as what price is going to do. And if there is like a lack of clarity, we're able to then wait for more information and then figure out exactly what it's doing based on what we do. So yeah, Adam, let me know in the chat what you think has been the most helpful, if some of the stuff that we've talked about has been helpful. Adam said, yeah, great content, model, your bias, top down analysis is in there. Oh, beautiful. Beautiful. That's what I like to hear. Awesome. So you would say that the bias and narrative breakdowns and things that I talk about in terms of, how to basically get in line with bias and narrative have been helpful to you? And kind of helped you pass the funded account? Or have the confidence to pass the funded account, I should say. Would you agree with that? In terms of technical TE levels, trailing levels, some premium discount. Okay. Nice. See, I have, including you, I now have 6 people that use the optimal trading tree, which is very interesting. It's a good model. Every single model ICT teaches are worthwhile. So it's good to see the independent thinking. You know what I mean? And again, I hope that the stuff that you guys see me do repetitively continues to help you guys gain clarity, because that's what my goal is here on YouTube, is to get you clarity so then you could eventually learn to walk on your own and bear the fruits of that labor, on your own, and I could just play a small role in that, and you guys keep me updated with your progress and whatnot. So I'm grateful that you guys have hopped on with me. Continue to be consistent. And those of you that do hop on, it's pretty much the same students every week. And isn't it ironic how those same students start to improve dramatically each and every week? Yeah, Adam, I totally agree. I completely agree. There's just some, just some different perspectives and gluing certain things together and figuring out, when things or where things belong in your trading journey, in your overall process, right? So that's a lot of the stuff that I try to clear up too, because that's part of clarity, right? Where do things fit in the grand scheme of things? Where's price going? How to determine that? How to, be flexible and turn your bias off, or when to turn it on, and when things are, less favorable. It's very important to understand those things, and those aren't necessarily the easiest things to master on your own. So I'm grateful that I can play a small role in helping you guys achieve that and glue those things together, because the results are insane, and it's good that you guys have been taking it upon yourself. Tony, how many funded accounts have you attempted and passed in the last couple of months? Seems like every week you're sharing a past funded account. And Adam, again, congratulations, bro. He said journaling is key. Yeah, I have actually a video that talks about journaling too, if you guys want to watch that. I talk about effective journaling, how I journal, what things you should include, if that's something you guys are interested in digging into. It's a very helpful video. I'm gravitating towards OTE model as well within kill zones. However, I'm going to study 1 hour candle OTE and Power 3 for the next few weeks. Yeah, I encourage you to do that. In terms of framework and narrowing down when price should deliver pretty aggressively. So yeah, I have a video already uploaded on my YouTube channel. If you just search up effective journaling WMG trading, it should be the first thing that pops up potentially. It's a little bit old, but the principles, they're timeless. It's the same stuff all the time. So damn, Tony's passed 5 funded accounts this year since he's been here. Amazing, dude. Yeah, I'd have to agree with what Adam said right there. He said journaling helps you resolve your mistakes and make configurations in your model. It does that, plus it highlights the issues, and it also allows you to encapsulate good moments. So then if you're struggling, you can go back and relive those good moments. It's something very underrated when it comes to what people do when they're learning. So, do I say have we gotten a payout? Yeah, well, you'll get a payout soon. As long as you continue, take it slow and steady. Don't be in a rush. That first payout, many times people blow out because they're so thirsty to get it, and then they start breaking the rules that got them there. So, keep the highs and lows managed properly. Don't ever get too high. Don't ever get too low, and be patient. Think about a reasonable objective. Is $500 a month good for now? $200 a month? Like, what is a good thing that's low risk based on the amount of risk you're given in the funded account? And manage it that way. Look for a phone bill to be paid. Look for groceries to be paid. And then as you graduate and continue to reach different levels of understanding, then you can increase what your targets are. Preferably you get multiple funded accounts you could stack So then you can keep your risk like below 0.5% based on the risk that you have available, and then you can get larger payouts using multiple with low risk. But if you have one account, make sure you're aiming at very reasonable things, like phone bills, gas, groceries. Don't look to have one funded account and then try to pay your rent. Like it's too big of a leap. You got to get used to how it feels to having real money available to withdraw, but then also real money to lose, real accounts to lose. Tony said he has over $1,000 in personal withdrawals from February through Friday since he's been here. That is amazing. Oh, man, that's amazing. I have one of my students, Harley. I mean, he made, I think, like close to $4,000 this month, and he's only been trading for like a year and some change. And he was with himself for like a couple months, and then he met me, and then ever since he's just been doing incredible things. I think he has a couple other things he watches too. Funded is not that good as yeah. Funded account. This is my opinion, right? Funded accounts should be used to make profits as an additional thing to make profits, so you can fund your personal account. You know what I mean? It helps you practice for your personal account to build discipline because you don't want to break the rules. They make you overwhelmingly disciplined, unreasonable at times, because some stuff isn't realistic, like certain risk parameters. When you're only allocated like $3,000 risk on a 100K account or something like that, you technically only have $3,000 you could lose. So you're technically trading a $3,000 account. So when you have a real account, you want to look at it that way. You can go a little bit above, but that's assuming that you have all the disciplines in place to not blow your account, not over leverage, not over risk, not get upset or swayed by losses. That's assuming that those things are in place. Otherwise, you should be trading it very, very conservative when you have a funded account, especially if you only have one. And then if you have one and you stack a couple of them together, that small amount that you're risking can be, multiplied. So then you're being responsible. Most people blow the account. I think it's 5% of people pass funded accounts. I think it's a higher percentage of passing, but less than 5% of people make that first withdrawal. It's because they are aggressive in the challenge, don't consider the fact that the challenge is the challenge you could reset, and that it's different when you get into an actual paid account that you can withdraw from. You can't be super aggressive unless you're willing to blow it and then go pass another funded account. Who wants to do that though? You'd rather do it correctly and have longevity, and practice good discipline in how you need to manage things. Because just because you have a 100K funded account doesn't mean that you have that to make. Like just because you have that doesn't mean the whole thing is allocated to you. If you lose $3,000, which is 3% of 100K, you're going to blow the account. That perspective is pretty crazy. If you blow that, you could really lose everything. But if you had a real funded account or a real 100K account with actual capital in it, 3%, that's something you could, if you're confident, you could risk that in one trade and be, not really worried about it. Even if you lost the 3,000, it's only 3%, so the risk is a lot tighter on these funded accounts, forcing you to be more disciplined, which is a good thing. But if you're like a more aggressive trader, eventually it looks unreasonable. That's why ICT says what he says about it, because sometimes he's risking up to 5%. If you do that in a funded account, you're going to, it's not a good idea, But try to get a string of withdrawals when you pass a funded account. Try to, work within a small goal set. Try to just get comfortable with making withdrawals. Small withdrawals, pay a phone bill, whatever. Get that momentum behind you. Then later on, hopefully you could stack accounts, but then use that money to funnel into a personal funded account. Okay. You don't want to solely be relying on a funded account to make your money, because the company at any moment could be taken out by regulations, as you guys have seen throughout the years. I've experienced that. FTMO I had 400K funded through FTMO. I had 60K withdrawals loaded up, ready to take it out of the account. And before I could even fully get the withdrawal, the regulations banned U.S. traders, people that live in the United States. So they stole my withdrawal, 60,000. They took both my accounts away, and I had to start over. But luckily, I had a good amount of money saved in a personal account from the withdrawals I did previously, so then I could continue to trade and didn't have to start completely over. So this is why you got to think differently than everybody else and be a professional, right? That's risk mitigation while you're managing your business. The risks. The risks. They could take the funded accounts away. The company can go under because maybe they're doing a bunch of stupid stuff like a lot of them have, and then you could lose everything. So yeah, Fritz said, gotta go. Data is run out. Good luck. Oh yeah, for sure. Appreciate you hopping on, Fritz. Just remember what I said earlier about the risk, about the conditions, how it's a little harder, and do not overtrade and over leverage or break any of the rules when you are, playing in demo or practicing in demo. You got to practice how you want to play, right? Tony said, meeting Chris has taught me what this really can do for your life. Yeah, for sure. And I appreciate you saying that. I try my best, Just a reminder, if you guys, of course, like the content, you guys show up all the time, and I'm appreciative of it. But if you do like the content and you support the channel, don't forget to like the video, subscribe to the channel, maybe spread the word to any traders that you know that you think they could benefit. So yeah, it's much appreciated. Yeah, so that's assuming that someone knows what they're doing, right? The rules can kind of change, Adam, depending on your experience. Pretty much 95% of people should never use 5%, 2%, or anything above 1%. A lot of times above 0.5%, because most people have no clue what they're doing. So I will not go out on a limb and say that 5%, or at least for me as a mentor, I can't go out and say 5% is a reasonable thing for most people. I do 2.5% when I'm real confident, but that's because I know what I'm doing and I know how to get out of losses. I'm not worried about taking a loss. So yeah, everyone's different though, right? Some people are more risk averse. Some people are more, heavily risky, and they're cool with that. They're cool with, blowing the account and refunding it if they make a mistake. But the rules for a lot of these companies don't allow that. Like Top Step, if you risk 5%, you're going to be blown out. And though if you pass the funded account risking that much, they won't even let you get the funded account because they'll classify you as a gambler. So there's those new rules that are coming in as well for a lot of these companies. Of course, that's not something that you have to really think when you're in a real personal account. But these are just some things that are different and add to the risk when you're using these funded accounts. Right? So yeah, it was when I lost that 60K because they canceled my account out because they stopped using or allowing U.S. traders. That was a dark time, that's for sure. Luckily, I had a backup, but the risk is there. That's why it's very, very important, right? Expert telling you target not. But yeah, so hopefully that some of that opinion was helpful. But again, when it comes to the DXY, right, getting back to the analysis, I definitely want to see how we're going to behave in here. We do see that there's a lot of overlap in terms of price delivery. Looks like we may be continuing to push higher, so we're going to watch how price responds to this wick, the midpoint. If we could stay above that and get displacement, again, I have a pretty strong interest in this buy side liquidity being targeted. We're also above the weekly wick. If I could find it. So we're above that weekly wick midpoint, so we'll see. It's kind of below it right now, but we'll see if that continues and either breaks down, taking out this wick here, which would put my attention potentially to the downside still, because we would still be respecting the weekly bearish order block and the weekly high and the middle portion of the wick. This could simply be a retracement like this if it's going to continue, but I'm pretty observant to the fact that we may see this attack this, so I'm going to continue to try to see if I could justify that. And then again, if that does happen, if we do see a displacement take place this coming week attacking the buy side, this will end up potentially targeting the weekly fair value gap down here. Okay, that just needs price to break down though, get down maybe below this, so then we can use that as an inversion, right, or a resistance level to then continue to push price lower. And of course, if that takes place, we could then reasonably target the weekly fair value gap, and we'll see as the weeks pass whether this is going to be a trustworthy deeper retracement or overall shift from bullish to bearish, or if it's just simply reaching down from a weekly perspective to then target a discount array that then sends us back to the buy side. Right, so we'll see what happens. Unless something changes, nothing changes, right? So we're still moving higher. In order for us to try to short and go against the buy side delivery, it's going to have to break down, right? We're going to have to see 3 PD arrays get violated. In this case, I mean, we have a wick in here too. Okay, so if we pull this up a little bit, we got a wick in here. You see that I have that marked out. We now have a fair value gap in here that's going to form from the daily order block or daily fair value gap. Okay, I'm going to remove this from the 8-hour because we now have something on this time frame that's workable. So we got the wick midpoint. It should hold if it's going to go higher, right? That's just the way it is. If it doesn't and it breaks down below that and breaks below this and gets below this wick midpoint plus the low, that is a very strong indication that this weekly fair value gap framework is going to be utilized, and then we could look to trade in that direction. And then once it gets down into there, we'll see how price wants to behave. If it overlaps that, say it displaces and breaks down below it, causing like an overlap of the fair value gap, and then maybe returns back, use it as resistance. And, you know, in that case, we could then use that as a framework to then target the low and see this as a quarterly shift, right? So Chawezi said he wants to see that. Right there. All right. It's like a 3-year-old video. So it says 2024, but I changed the name to try to see if there's a little bit better search engine optimization. But it's all pretty much, it's very, very useful. And I talk about different ways of doing things when you're journaling. This is when I had FX still in my name. That's how we started with Forex, you know, but no longer solely Forex. This is how I used to journal, how I also used to study, right? I used to do a whole lot of things that are now different. It's crazy how things change as you get more wise, right, to certain things. This was a very good way. Right, this is very detailed with how I used to do things. I still do very, very detailed stuff. I just have a different protocol nowadays when it comes to journaling. But yeah, if you're live trading, you definitely want TradeZella or something that maps that out. For my private group, I'm investing in a journal that I'm going to be able to give everybody. It's going to be very similar and inspired by how TradeZella operates. With like the monthly diagram and green or yellow color showing with you being allowed to input your trades, right? So that's coming. Plus some, I guess you could call it a course, private course for those that are in my private group, just to break down the whole system we have, every different element, my thoughts about it, just for further reinforcement for those that join the private group for a lifetime, right? So yeah, there's the effective journaling. But yeah. So does everything make sense as far as what I've been mentioning for the DXY? So we talked about the bonds, yields, currencies, EU and GU, and now the DXY. What levels we got to watch. Again, if price was to break down, get below this fair value gap, it'll most likely continue and try to take out the low. But if we stay above this and respect these levels here, start to continuously respect bullish PD arrays like the wick and bullish order block, turn fair value gaps to inversions, and stay above the wick here that should be bearish, right? If it stays above that continuing, we have no reason to trust that sells are going to kick in. You know, we have all the reason, especially with fundamentals like I mentioned earlier, to then continue to go higher. Okay? So yeah, does everything make sense so far with all the different assets I've talked about? If they do make sense, we'll move on to the indices, and I'll try to keep this video less than 2 hours. Of course, that depends on if you guys got questions and stuff you want to talk about. Yes, let me know in the chat. All right. Oh, come here, Milo. I just threw a bottle on the floor and it hit my dog. Oh my God. I'm sorry, buddy. He's looking at me like, what the fuck? What did I do? I'm sorry. Whoops. Damn, I feel so bad right now. I didn't even see him there. Oh, man. Oh, my God. What a bad thing to do. Oh, man, I should have looked before I tossed that damn thing. I feel so bad now. Oh, my God. All right. So, like I said, yeah, it makes sense. Okay. All right. So with that being said, we will beautifully move on to this amazing asset we call the indices, because that is my that's my baby. It's my baby. Right. So if we look at what we were looking at earlier, let me take some of this off. So yeah, overall, it's just been a spectacular recovery. You know, I kind of thought so. You know, regardless of this big, huge decline, we could see that the open for the year was right here. Okay, so you drag the open price out. You see there's consolidation, manipulation to the yearly order block. Hit that price, change the state of delivery, breaking above the high here. And then we've just continued to go higher using a market maker buy model, yearly power of 3 principles, and now we've just continued and basically broke above that. So again, there's a possible chance if we do see price break down through some of those levels on the daily chart, right? If it starts to break down below this low, that will be 3 PD arrays being violated, right? The wick, fair value gap, this wick, and the swing low. So that would then push my interest to seeing price target the weekly fair value gap and the sell side, you know, relative to that. Okay. We still got this daily bullish order block. So again, if it trades through that, starts closing below that, there's no need to push and buys until it was to prove otherwise that it's ready to go again to the buy side. So we're going to continue to hold this as a continued buy side delivery with a possible underlying likelihood that they're offloading their buy positions. We got SMT at the high, so we'll see if that continues. We do got an order block here on the Dow. Okay, so we'll see if the mid portion of that order block is going to hold. We still have a bearish order block here too on the 2-day chart. So we'll see, is that one going to hold, or is the daily bullish order block going to hold and go higher, right? I do feel that we may be witnessing price getting ready to change state of delivery from bullish to attacking sell side. What specific sell side target am I referring to? It's going to be this weekly fair value gap. And if price gets down there, we got to watch how it's going to behave down there in this unfinished fair value gap that has little to no sell side delivery. That's why I don't have the entire weekly fair value gap outlined here. That's why I don't drag it down. We have a part of the wick in here overlapping that lower portion, so it doesn't have to come down and close it all the way in. Closing it all the way in and then using it as resistance then kicks us into long-term bearish order flow that could then look to target these areas over here. And that would be within the 20th and 60th day range as well, if that does take place in the near term. So then that would be a quarterly shift from bullish to bearish. But as of right now, it's just been continuing to go higher. So there's been no interest in trying to find long-term short positions or hold for any short positions over the minimums, which I've taken some shorts, right? I've taken some shorts in this, targeting the daily order block. But then when it kicks back in, right, we're able to get back in line with the buys. All right. So, yeah. So, I mean, overall, that's kind of my opinion, right? Like, there's really not much else to kind of discuss. There was SMT at the lows here, which, again, was inside the order block here on the NASDAQ. And so that has all held up and continued to run higher using the order block off the heels of an SMT, right? And the one asset that's been kind of showing that there's a crack in correlation, which generally in this case shows you that there's something taking place on the back end. What could be taking place on the back end? Well, we have that COT analysis that shows that there is potential offloading of buy positions I've been mentioning since we were way over here. Okay, so we're going to see, is that going to finally manifest? It's going to show, if it does manifest, the strength in that that observation and that tool, but it's also going to show you how laggy COT can be and why it's not something that you have to fully submit to on a daily basis unless the chart shows you that the COT is now finally kicking in order, right? The analysis on the COT is kicking in order. In order for that to take place, for me to have that opinion that the COT is finally showing us that we're ready for shorts or offloading of buy positions, we're going to have to break through our 3 PDA rule, keeping it very simple. So you see a merger between fundamental analysis and then the 3 PDA rule validation and validation principles, how they work together and how you can use that to continue to either trust something in a particular trend or if it's time to start changing your opinion, either short-term or long-term, depending on what happens, right? All right, so I could say if this drops below this and starts to show no respect to this order block at that time, which it has been showing support, right? But if that changes and breaks down, again, that's all just setting up reinforced opinions to target this weekly fair value gap on that weekly chart. Price doesn't just go up, okay? It goes up, then down, reaching for a discount, then it attacks premium. It goes for external range liquidity, reaching for internal range liquidity, and then it reaches for external range again. Or if it reaches for external, drops down to internal, and then fails to attack external again, and then breaks down below a low that forms within that internal delivery, that is a break in market structure. Okay, it's a piece of gold right there, by the way, if you maybe didn't realize. But yeah, just rewind what I just said and think about it. It's a very powerful opinion, little tactic to identify breaks in market structure. Okay, so yeah. So let me see. But yeah, that's pretty much all I can really see in terms of importance. We have this fair value gap in there as well. So again, unless these levels get violated down here and start to turn off the buy side delivery, I'm going to continue to see this hold. Anticipate that. The start of the week, we're going to let some of the price delivery unfold, and then kind of get a feel for what the weekly range is going to do. We are coming off of a pretty strong consolidation, and we're still in the summer months. So risk is cut in half due to the fact that it is the summer months, and there's a likelihood for price to be a bit harder to engage reliably. But this, we called the bias on Friday pretty accurately too, live with my private group. When price got up here, we anticipated the Friday reversal. Specifically to this fair value gap, we were able to take trades within that. I think one of my students I think my student Harley made, let me go back and see, I actually have it. See where it's at. I mean, if you go to the student testimonial section, I mean, things have been pretty incredible. What we have been seeing unfold lately. So yeah, this was my engagement, right, on Friday. Price declined, was able to capture 60-ish points, ended up getting 1% win. 15 point, or this actually caught me because it was a news event live with my group, my private group. It caught me when I had a 15-point stop loss. It took me for 31 points, and then I was able to capture this to recoup it, and then result in 1% gain, just to clean that up. But then you come over here and you look at my student Harley. Pretty much the same exact logic, right? We used the London's high manipulation to basically pair our smart money sells with willing buyers, right? So manipulation, relative equal lows, right? And then he took a couple of pretty strong pyramid entries, and then of course closed out, I believe, the week so far with above $4,000 gained, which is absolutely spectacular. Harley, if you listen to this, you are absolutely spectacular, superstar in the making. I cannot wait to see you go live on YouTube. Same with all of you guys that end up getting to where you're trying to go. I can't wait to watch you guys put this stuff into action and show the world what we do here and what you can do on your own. It is something I look forward to. Absolutely. I've one of my newer students from the last couple weeks, he said this about what he's been seeing, and it's pretty amazing. He said, I'm the best mentor out here. I appreciate that. This guy's name is Michael. Michael's amazing. Amazing 80% win rate. When he's in my private group, he's able to see that. You guys have seen it too. But it's just incredible. Then we got Tony passing his funded account. Okay, congratulations yet again. Amazing. Okay. This is one here that I took a loss on. Right, I got caught in this. But then, of course, price ended up delivering what I wanted to see it do. So one loss, one win, similar to Friday, and we just secured it off. And you can kind of see why, taking profits is a good thing, especially in the conditions, because it's heavily manipulated and things are very highly likely to return back against you. Okay, so secure the 30 plus that you can get offered if you can. This was like a week ago, so Harley is well above $4,000, I'd assume, given what this looks like and then what I just showed you. It's pretty spectacular. So again, Harley, you're amazing, and all of you guys that are on your way, you're amazing as well, that show up here. This is one of my students as well. I talked to him about this. I really don't like the multiple executions. It's 1, 2, 3 executions. I don't like that. Or wait, 1, 2, 3, 4 executions. So it's got to be only 2. Or 2, max 3, depending on how you managed it and how you feel. Right? So what is that? Oh, this is in my free group. Let's actually go to this. I was going to look at something I totally forgot. See, in my private group, I have all the stuff from years ago, too, so you could validate whether I just woke up one day and started doing this or if I've been doing this for years. I've been doing it for years. I have some posts from 2021, so it's when I kind of started being public. So yeah, it's been pretty amazing. Lots of student markups lately. It's been pretty great. I got, the models and breakdowns and a bunch of different things. Private calls, a bunch of different videos that students can take. And any questions I get asked on live calls, we turn them into lessons. Those lessons turn into part of the archive, So So yeah, now we're in week 4. And yeah. All right, so hope you guys get motivated by the successes I share with you. You know, a lot of you guys that hop on with me are the exact people that are having the successes. The ones that are mostly telling me they're doing well. And then, you know, some just hop on, they come and go and don't get really much out of this, unfortunately. But the ones that see what we're doing here, the ones that are serious about learning, that aren't looking for signals by itself, because I give signals, okay? Let's just face it. But I don't put you in the trade. You're going to decide your stop. You're going to decide where you execute. I'm going to give you the bias and narrative. And that has helped people pass funded accounts and, you know, have success stories. It's overwhelming the amount of success stories I have on Instagram. I've taken screenshots and put them in the little testimonial section. I mean, you could sit there for 5 minutes just literally scrolling through how many testimonials I have from both free and especially in my private group. I've taught over 200 people at this point, 201 now to be exact. And, you know, a good amount of them are successful. But then, you know, there's a good amount of them as well that don't really get much out of it because their objectives, what they come to me for, doesn't align with what I'm giving out. You know, if you're here for signals, if you want me to trade for you, if you do all these things and think in the wrong ways, you're not going to have fun here. You might as well go watch Joe Schmo on the internet that rents his Lambo and gives you 1,000 trades a day, which there aren't 1,000 trades a day that are reliable to catch big moves within the daily, weekly range. But, you know, everyone's got their own taste in what they are interested in and what they want to see. So hopefully those of you that hop on this, when you see the value, you take it and apply it. And again, always keep me updated with the progress you make. Keep sending me, you know, what you're doing. I want to give you your flowers and celebrate you and have the WMG family celebrate you as well because you guys deserve it. And, you know, hopefully we have more success stories pile up over the years, over the next couple months, and then, of course, the next couple years. But again, those of you that aren't part of my private group, but you want to become part of the private group, the enrollment ends for this year in July, and it will maybe open up maybe it'll open up again in November. I might wait till December. But the people that I have right now, I'm going to close off access because they're going to need my full attention. A lot of them are really new, so it's especially important for me to make sure that they get most of the attention. I'll still obviously be live on YouTube. I'll still be doing these things, and you know, I'll still be able to talk back and forth with many of you guys in the YouTube family. But when it comes to the private group, there's always an opening and there's always a close because, you know, it depends also on who's joined. Do they have experience? You know, what are the issues? How much time do I feel needs to be put in? Yeah, it's always different every year, but the closures are always the same. It's always July closes, November/December it'll open up because those are slower months. All right, so keep that in mind. If you're on the fence and you want to join, definitely make sure you go ahead and take advantage of that. Tony said, I'm a great trader and knowledge and love for what you do. I'm grateful. I'm grateful that you say that you could see that. Very grateful. So, as always, I appreciate you, Tony. Chawezi, I appreciate you for hopping on. You guys are some of the most consistent to hop on. So, as a result, right, you're getting a lot of improvements. You know, so Nutty Fafa, what's up, my brother? It's been a minute, yo. You freaking pop in and out. It's always good to see you, bro. I hope everything's been going well with your school. Hope life's been treating you and your family well. It's always good to have you pop in. But yeah, you too, bro. You definitely gotta keep me updated with what you're doing with your trading. If you took a break, you know, that's good to make sure you manage some of the stuff taking place. All right, good. I'm glad everything's going good. But yeah, appreciate y'all hopping on. Yeah, so based on all the stuff that we talked about today in terms of technicals and anything else that we've had a discussion about, do you guys have any questions before we bring this video to a close and get ready to attack the market again, as always. Is there anything you guys need to have amplified? Is there anything that wasn't clear today? Any questions before we go? So just let me know in the chat. Dang, that must be a pretty massive lag, huh? That's a pretty sizable lag. All right, well, with that being said, again, I hope you guys got value. Don't forget to like the video, subscribe to the channel, spread the word. Let anybody that you know that trades that you think can benefit or add value to the community, shoot them a link. Have them come and join us every Sunday and Tuesday. Growing the community, this family with people that have like minds, that have the same goals, that understand what it really is going to take to be a trader. And keeping everybody tight knit is something that I really want to do. I just feel it makes the community, more engaging, more intimate with each other. And, one day this community is going to be so big and powerful to the point that nobody's going to be able to deny anything about anything. Who knows? Maybe a lot of us will join the Robbins Cup in a couple years and try to fill the whole leaderboard right below Larry Williams, since ICT don't want to do it. We might as well do it ourselves. All right. So yeah, with all that being said, MIC or Mick, good morning. And you just joined. We're actually about to close the video. We've been on for almost 2 hours. I do encourage you to watch the replay. There's a lot of stuff that you can get from it. And yeah, if you have any questions after you watch the video, just DM me on Instagram, and I can answer any questions that may arise as a result of you reviewing what we talked about. Right? And then again, every Sunday we're live at 5 or 6. Today was 7 a.m. Pacific Standard Time. And just overall, we're also live on Tuesdays at 6, sometimes 5, 6, or 7. Or on Tuesdays, we're only live from 5 a.m. or 6 a.m., depending on the news that's available for the schedule. But yeah, every Sunday and Tuesday we're on, relatively within those time windows. My private group is live every single day. So again, if you need extra one-on-one type of mentorship, if you need some more close discussions with someone that can hold your hand and walk you through each element of things. Some people need that type of stuff. Some people don't. A lot of people don't. But if you do, if you feel you are one of those people, you definitely want to make sure you check out what we have to offer in that regard. Because I can tell you, based on what I've heard from my students, based on the results that you guys see, and the people that I'm shouting out, a lot of them are from my private group and have had crazy results. Again, that's the testimonials are also shared on my Instagram under the testimonial section. And like I said, there is an overwhelming amount of feedback that you guys could look at if you are new and want to see if being here is worth your time. And then, of course, all the videos I post every week, especially this year. Every single week, month, and day, we've been correct on where price is going to go, which I have been recorded live, putting my neck out there, right, my abilities out there, and, the validity behind what I say, it's put on the line every week. And it's been coming to fruition. I've passed funded account. I've had multiple students passing funded accounts. I specifically passed one myself in addition to the other accounts that I have, just to show an example of the rules, like the limited rules, the 1 to 2 trades, the risk protocols, the bias and narrative ideas, using one model, all those things I used to, pass a funded account. And then I've had a conversation about it, showing that, even if it takes you a little bit of time and you got to be more patient and submit to the rules, you could still pass the accounts, even if it's slow and steady. And you'd rather be slow and steady, but for sure pass, rather than fast and reckless and never pass, because you are impatient and never pass. So yeah. So again, I hope you guys got value from today. Mike or Mick, I appreciate you subscribing. Again, we go live every single week without fail, and hopefully you gain value from that. Maybe you could watch and review some of the stuff we've done previously, or just keep hopping on, and let's see if we can't get you to improve with the things that we talk about, both from a mindset perspective and being professional, but then also the technicals as well. All right. Again, if you guys have any questions, you can just DM me on Instagram. I'll get back to you in a reasonable amount of time. And yeah, we'll be live again on Tuesday. And I hope that everything made sense today. And I hope you guys got value. But with that being said, I will talk to you guys on Tuesday again, and also in my free Discord, which the links for all that stuff, including my private group and Discords and whatnot, are down in the description. All right. So yeah, I hope you guys enjoy the rest of your day, enjoy the rest of your weekend, and I will talk to you guys on the next one. All right, have a good weekend, you guys.